How many times have you gotten into a day trade or a swing trade and you had a good entry, but then as it started to move up, you got a bit nervous, you kind of lost your confidence and you maybe sold for a small green profit, maybe 25 cents per share, maybe even 30 cents per share. And then you see that if you just sat and did nothing, the stock went up $1, $2, $3, maybe $5 per share. And then you see this and you're like, oh, well, there's no way I could have held that anyways. Well, there is. And I'm going to share with you my tips and tricks that I have learned over my 7 years of trading that have helped me transition from being a more scalping day trader that's making 5, 10, 15 cents per trade to now making $1, $2, $3, $5, even $100 per share per trade. So make sure you stick through this lesson. I'm going to give you my main tips of how I stay patient with the stock and let the stock do the work. As many great traders before me have said, it's not about actually pressing the buttons. It's about finding good setups and then just waiting and letting the stock do the work for you. So I'm going to be sharing with you my example on HTCR today, which I got into at about $1.91 per share. And my top sell was at about $3.12 per share. So just over $1.50 per share. And for most of you, that's like mind blowing. That's wild. You'll never even dream of doing that. But I'm telling you, it is simpler than you think as long as you follow the steps that I'm going to lay out in this video. So make sure to stick through it. If you have any questions, leave them down below in the comments section and let's just jump right into it. All right, so first off, let's just lay out some basic kind of background knowledge about HTCR, what the stock is and how I found it. So first off, the main scanner that I use every single day is called Scan. I have a link down below for Scans. There is a 7-day free trial with no credit card needed if you want to check it out and sign up. And I also post my scans every day on Twitter and in my TradeBuddy chat room. So if you look here, bring up the Pro scanner. This is kind of what I use for pre-market. You can see that HTCR was one of the gappers this morning, and you can see the float's about 4.7 million shares. So as a small cap day trader, it is very important to note whenever a stock has a smaller float because not all stocks move the same. So that's kind of tip number one is understand that not all stocks move the same. A stock with a 100 million share float is probably not going to move as volatile as a stock with like say a 1 million share float. So you cannot put arbitrary kind of price targets or stop loss targets on stocks with vastly different profiles, right? Because yeah, maybe a stock that's 100 million shares is going to have a crazy move if it goes up 25 cents, but the stock with a 1 million share float is not that crazy to see a 25 cent per share move. Usually those move dollars per share. So don't apply arbitrary risk or profit values on vastly different stocks. Instead, what you have to do is base your trades around the chart, which I'm going to be showing you in this video. So HTCR, you can see it's a low float. And HTCR actually had news yesterday, if I kind of pull up the news feed here. And so you can see here that yesterday in after hours, they dropped earnings. They reported strong first quarter 2020 financial results. Now, just a quick tidbit with news. I don't really care that much about like reading into news that much. I more so care about the reaction to news, right? Because that's what really matters. A stock could have amazing news, but if number one, no one sees it, or number two, people don't really care about it, then the news doesn't really matter, right? It all depends on how the market reacts. And so if you look at after hours, you can see that the market had a positive reaction. It spiked up from about $1.30 per share to a high of $1.95. Now we're going to kind of get into the actual technical analysis, right? So as I saw it this morning, it was kind of like this. So I noticed that, hey, they dropped news and it set this resistance, right? Because you can see that's where the price kind of topped out. So I just use the line chart and then mark off, okay, that is the previous resistance. And this will all make sense in a few minutes. So now from there, I want to mark off where is the support that it fell down to after hitting that resistance. And that you can see is down here at 155. So this kind of establishes the range of the chart, right? Because you can see it has pretty big range between the resistance and the support. It moved about 40 cents per share. And that's pretty big, right? That's a pretty substantial range for the chart. So that level will be important in a few minutes. So now you can see in pre-market, we saw it had this big gap up. It spiked up through that previous resistance. And now if you've seen any of my videos, if not, I highly recommend you do so because they have some amazing lessons in there. especially the last one where I made over 15 grand on one trade, you can see that we now have this situation or the strategy called using previous resistance as new support. So this kind of checked off all the boxes, right? Number one, we know it's a first green day stock. Number two, we know it's a low float. Number three, we know it has good range. So now I'm going to plan a trade. I'm going to plan to go long off this previous resistance as new support. And now this is where I like to use a tool that I call the trade planner, which is available to all TradeBuddy members. And this is the very handy tool because it actually kind of tells you exactly how many shares to use based on the chart, right? Because risk management cannot be dictated by random numbers that you kind of pull out of thin air. You need to plan your trade around how the chart moves because, like I said earlier, every chart is different. So let's just bring up the trade planner here. And so let's just say, for example, you have a $15,000 account, right? Now, on every trade you want to risk, let's say 2% to keep it kind of conservative, right? So that means the max you can lose on any single one trade is $300. And what this means is that it would take over 200 max loss trades back to back to back to back to actually blow up your account, which if you're the worst trader in the world, probably won't even happen, right? So very controllable max loss. So now we know entry price, as we said before, is 195. Max loss is 151. So now it tells us that we can use 682 shares on this trade. So now we just need to find the target level. And so with the target level, what I did for this trade is because this first resistance here at 218 was a bit too close, I decided to look at the weekly chart to determine where are the previous historical levels of resistance. So if we just go to the 5-year chart and we go to the weekly chart, now we just mark off previous levels of resistance. You can see the first one that we see, if we just go left and up from that current 195 level, the first obvious one you see is right here at about 262, okay? The next one after that is right near $3. And then after that is up near 350. So now we have our target levels. And if we just bring back up the trade planner, you put in 262 into this first plan profit. Now you can see, okay, we can sell 448 shares at this first target and we guarantee making $300 on a 15K account. And we still have about 200 shares left over in case it goes higher for even more profits. And this is what real trading is all about, right? No one else shows you this because no one else knows how to actually plan their risk properly. But this is what we do at TradeBuddy. So now we have an actual plan and now it's just a matter of sticking to the plan, right? So number one, you need to have a plan, know what a plan is. And then number two, actually going in the trade, you have to kind of follow and allow the plan to play out, which I'm going to show you next. After you get your entry at market open, you can see it held that support very well. Only one candle broke below. That's totally fine. Now I want to go into like the in-depth step-by-step kind of meta-analysis or whatever of like how you would react to this emotionally, right? Because if you're a newer trader, say you have a limit sell waiting at 262, right? Maybe at 257 even. And the first few candles go great. It has a big spike up, but then you see it only stops at 250 and it starts to pull back down and you see your unrealized P&L kind of shoot up. And then it goes back down. And you're like, oh man, you get kind of cold feet. And you might say, you know what? I'm just going to sell it for a small green trade. Green is good, right? That's what everyone says. But no, if you just sit back and follow these simple steps, you can actually extract more from the trade. Because after this broke out over the pre-market high, there is one simple rule that you need to follow to stay in strong trades. And that simple rule is, as long as previous resistance holds as new support, the stock can keep going and you have to stay patient to let it keep going, right? So if you just go back to the line chart and we mark off where that previous resistance is, right at 219, once you see this break out and it starts to pull back, you just sit back, sit on your hands, do nothing, and tell yourself, okay, it did not hit my target yet, but as long as it holds 219, it has the chance to do it. And then you just wait. I know it's tough. Most of you are probably, scalping on the 1 minute chart or whatever, but trust me on this, if you just wait, magic can happen. And as you can see here, 5 minutes go by, it holds support, bounces off it perfectly, and then sure enough, from there spikes up and taps 262. And if you just had the limit sell waiting there and you followed your plan, you would have made more than if you were trying to micromanage and make the small green profit because green is good, right? That's all BS. Stick to a plan no matter what, because that is how money happens in the market. And then from there, I locked in the partial at 257. I like to undercut from my actual targets just a bit, just to guarantee I get filled. And from there, you can see the next target is at $3. So once again, I have a partial profit set there because I know it's a potential resistance point. And I just wait, right? I had to wait for it to spike up. And once it gets there, I get filled automatically because I have a limit sell waiting there. So what I do is that before the trade, I make my plan. I know exactly what I want to do. And I set my limit buys and limit sells before they get there. So then when it does get there, I can't second guess myself because I'm already filled. So that means that if it does spike up, I'm not gonna, hold on to the full size in case it goes higher, because that's just greed talking, right? That's an emotion. And so by doing this, I guarantee that every single trade, I am following my plan to a T. And from there, I didn't have that much size left because I locked in a lot in these first two targets. And I was trying to hold on to the rest into the 350s. It never came that close. Topped out about 343. But still, even with just these two sells at 260s and $3, instead of, making only 15, 20 cents per share and then just wondering and just complaining that, oh man, I sold too soon, the market went without me, I was able to make a very structured and smart day trade on a very good stock. And you can see from there, it started to pull back. That's how you do it, right? Number one, you need to know what your system and strategy is. If you don't know that, I have a free course down below, and I'm gonna link it up here, where I kind of go into and I explain step by step how to get data-backed confidence. Number two, make a watch list and follow it, right? You need to be up in pre-market and understand what the key movers are. If you're trading small caps, I post a watch list every single morning in TradeBuddy, and it's very valuable. As you can see here, I had many members in the room who got into this. Matt got in at 222, sold at 276, made $0.50 per share. Gil got in at 195, sold at 240 average, making over $0.50 per share. And you can see Maurice got in at 220 per share, sold at $3 per share, making over 80 cents per share. Lewis, 188, sold at 270 and at 310. So you can see that if you structure your trades properly, you can extract more from the market. All right, so those are the main tips I have for holding on to your winning trades longer and avoiding that kind of scalp mentality. If you want to join us in TradeBuddy, we have a 14-day free trial where you're going to get access to everything that I teach. I have my full course in there. I do webinars every single day. I do a pre-market webinar to break down my watch list and a post-market webinar to break down my trades. We have an amazing community of so many great traders who I'm very proud of. If you want to join us, 14-day trial, click the link down below, and I'll see you inside. If you enjoyed this video, make sure to hit the like button for the YouTube algo. If you have any questions, like I said, leave them down below. I'm happy to get back to you. And subscribe, please. Thank you very much. Bye-bye.